Alrighty folks, so here is an example of a bank reconciliation that's more on caliber with what you have for your homework. So you'll notice the last homework problem in Cengage is a pretty big doozy, and it's 7-5A, so the sister problem for that is 7-5B. So I'm going to go ahead and demonstrate that in the Excel template. So again, this is different from the way I did it in the video. So I had to use the two-column approach where I put the books on one side, the bank on the other. So this has the bank's stuff on top and the company record stuff on the bottom. So like a top, bottom and top kind of thing. And this is kind of similar to what you'd see like at a real company. So their bank reconciliation might be similar to this. Okay, so a couple of things. One thing I do like about this problem is it's the closest, whatever that thing again. It's the closest example of like if you were going to do a real bookkeeping job. Okay, this would be one of the things that a bookkeeper would have to do every month. So it's a pretty good exposure to see kind of one of the monthly duties of a bookkeeper. So here we go. So we've got a couple of things here. I did a little PDF for you of the 2 pages of information that are in your book. So if you have the book, you can just open to that page 357. Okay, this is the information that'll show up on page 357. It's the company records information. And then on the very next page, on page 358, you'll see the bank statement. So this is the bank statement. So that's the bank records, and then we have the company record stuff. Okay. So the first thing they ask for here at the top is the balance according to the bank statement. That's easy enough. We just go to the bank statement and we pull that number. So here's the bank statement, and it shows us new balance right here. 11,601 and 41 cents. So there it is. Okay, and you'll notice that if I try to zoom in on this, it actually makes that number turn into those weird symbols. So I'm going to keep it at the original magnification so that my numbers don't get all messed up. I don't know why that is. It's just one of those weird things of an Excel. Okay. And then we're going to scroll down here and we're going to put this box, the cash balance per the company records, and you'll notice that if you hover your cursor over that box, that little red thing, that means there's a cell comment that's been put in there for you. It says to start with the cash at the beginning of the month, add the checks deposited, or add the deposits for the month, and then you subtract, man, what is that thing? Okay, so deposits for the month, and then you subtract the checks written for the month, and that'll give you the balance per the books. Okay, so we're going to go and look at the company records page, and you'll see what they give you. So we're in the month of July, so we're doing July's reconciliation. They've given you the reconciliation for the month of June, the previous month. So the ending balance or adjusted balance on that reconciliation should be our starting point as our beginning cash balance. So this is our beginning cash. We're going to add deposits, and so those are given right here, the cash receipts for the month of July. And then we're going to subtract the checks written, so they give you the total checks written on the bottom there, the 8379.42. So I don't have to keep flipping back and forth to remember those. I'm going to go ahead and write that down. Blah 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 blah. Okay, so I'm going to write down the beginning balance of 9,578, and I'm going to add 6,465 and 42 cents, and then I'm going to subtract 8,379 and 42 cents. Alright, lovely. So we go back to the reconciliation. So we open a formula with a plus or an equal sign, put in the beginning cash balance of 9,578, add the deposit amount of 6,465.42, and then subtract the checks written 8379.42. Enter, and that's the cash balance per the company records. Cool. And that one I can actually zoom in and it doesn't go away, so I'm going to go ahead and do that. Alright, okay, so that one's going to be funky looking. We know the number's there and that it's correct, and then if we zoom out it'll show up again, but I'm going to stay zoomed in just so that you can see everything better, hopefully. Alrighty. Okay, so next we're going to add our deposits in transit. So that's the only addition we should have to have. So how do we find that? Well, these are all the deposits for the month of July in this section. Okay, so those are all my July deposits. But we can't just look at that. We also have to look if there were any deposits in transit in the previous month's bank reconciliation. Okay, and there was. Okay, so take a look at this. In the previous month bank rec, we had a deposit in transit of $780.80. We have to make sure that that deposit clears on the current bank statement. So let's go look at the bank statement to see if that $780.80 deposit cleared. So we go up to the bank statement. Let's see, deposits. There it is. So if you look in the deposits column here, you can see that that deposit actually cleared on the 1st of July. Okay, so that will fall off the bank reconciliation for July. So we don't have to worry about that anymore. And now all we have to do is look at the current month deposits for July and see if they clear the bank or not. Alright. So we go back down to our book deposit section. So let's see. Let me get some scratch paper here. So we have a deposit of $569.50, a deposit of $701.80. I'm writing them down so that I don't have to keep flipping back and forth and making your eyes go all crazy on the screen. I know that can be kind of frustrating, seeing screens flip back and forth all the time. So I'm going to write them down, and then I'm going to go to the bank statement to see if they all clear or not. Isn't this fun? This is kind of like, real life bookkeeping. I love it. I love it. Alright, so there's a total of 1, 2, 3, 4, 5, 6, 7, 8, 9 deposits. So now let's go and see if they clear the bank statement. So we go up here to the bank statement, concentrate on the deposits column. There's the one for $569.50, so I'm going to cross that one off. There's the one for $701.80, cross that one off. $819.24, cross that one off. The $580.70, cross that one off. These miscellaneous items, that's something else. We'll talk about that later, so skip those two miscellaneous items, or MS, or whatever. And then we go down to $610, cross that off. $701.26, cross it off. $713.45, cross it off. $601.50, cross it off. So, yeah, that's it. I don't see the last deposit there that was made on the 31st for $1,177.87. So that means it's going to go on the bank rec as an addition, deposit in transit. So let's go back to the bank reconciliation and enter that in. So deposit as of July 31st, not recorded by the bank. So we'll go ahead and enter that in, $1,177.87. Perfect. Okay, then we're going to add the unadjusted bank balance to that deposit in transit. Press enter. Oh, that's driving me nuts. So let's go ahead and zoom back out to where we can see this number again. So then subtotal $12,779.28. Okay, so that's just with the additions. Then we'll do some subtractions. That'll give us the adjusted balance. Okay, so it says to deduct any outstanding checks. So we have to do the same thing that we did for the deposits. we have to do that for the checks now. So I'm going to go back to my check register, or to the section with all the checks on it. I'm going to go back to the previous rec and look to see if there were any outstanding checks on that one. So the previous month rec, I had check number 580, 602, 612, and 613. So I'm going to make sure that those 4 checks clear the bank statement. And if they don't clear, they'll stay on the reconciliation as a reconciling item. Okay, so we have those, and then we have the checks that we wrote for July. So one cool thing is I don't really have to write all these down, because I'm just going to concentrate on the check number for the time being. And it looks like I wrote checks 614 all the way through check 634. Alright, so 614, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29, 30, 31, 32, 33, 34. So 614 through 634, and also the 4 checks that were on the reconciliation from the previous month, I'm going to make sure those cleared. Now, one thing I'm going to note is that you'll see, it's kind of jumping out at me right now, check 622 and 623, those are voided checks, so I'm not really going to look for those to clear the bank. So we just can make a note of those 2 checks, that they're not going to clear, they're not going to appear on the bank reconciliation, because we never cut those, they're voided. So we'll skip those 2 numbers, but we're going to look for all the other ones and make sure that they clear. So let's go back to the bank statement. We're going to go to the checks and other debits section. So you'll see the first check that cleared was check 580, so we can cross that one off. 602 cleared. Okay, over here 612 has cleared, so we can cross that one off. And it looks like 613 is still out there somewhere. Oh man, it's floating out in space. So somebody is sitting on that check. So I'm going to go ahead and enter that check number in on the reconciliation as a deduction, because that is still showing as outstanding. So let's go do that. So deduct outstanding checks 613, and we're going to enter the amount. The amount was, I don't remember, 613 was $137.50. Okay. Alright, so there's 2 more. So normally you wouldn't have this nice template that tells you how many there should be, because it looks like there's just 2 more. But it's nice to have it for a Principles of Accounting class to give us some guidance, so we can keep our sanity. So back to the bank statement. We go back. Alright, so we've taken care of all the stuff that was on the previous bank reconciliation. Now we're moving on to the new stuff. So remember, we're looking for check 614 through 634. And so there's 14, 15, 16, 17, 18, 19, 20, 21. We skipped 22 and 23 because those were voided checks. And then 24, 25, 26, 27. Oop! It's skipping one. I don't see check 628, so we've got to write that one down. Make sure to enter that in on the bank rec. 629, 30, 31, 32, and it looks like 633 is a reconciling item, because I don't see that one clearing. And then there's 634. So those are our other 2 checks. Check number 628 and 633. Okay? Let's go and look for the amounts. So we cut those checks. 628 was for $837.70. 633 was $310.08. Let's go put those on the Excel template. So check number 628, 837.70. Check number 633, 310.8. Okay, so then we add those up. So I'm going to do the little sum formula, equals sum, open parentheses, highlight those, press enter. And then I'm going to subtract that number from my subtotal. So plus to open a formula, click on the subtotal, subtract the deductions. That is my adjusted balance. So I know that my cash balance down here in the company record section should be the same. Should be the same. Oh, where I dropped my pen. I was at a pen. I dropped my pen. Okay. So now let's go and take a look at the company records section. We are done with the bank records. Pat yourself on the back. Let's go take a look here. Some things that are going to be on the bank statement that we will not have accounted for yet. So one is this miscellaneous item. What is that? What does that have to do with? Let's see. So what I'm going to tell you, that's a note receivable. So that's basically somebody owes us money, and instead of having them pay us for the note receivable, so note receivable is kind of like an alternative receivable. That doesn't have to do with it's not an account receivable basically. So a note receivable is evidenced by an actual borrowing instrument where they sign an agreement with interest, so they're going to pay us the principal and interest back. But what we've directed them to do is we've told them, okay, don't write us the check, don't send it to us, just send it to the bank, with the proper notation, and then that will put it in our account for us. So it keeps it from having them send the check for us, and then we have to take it to the bank. It's better for us to just have it show up in our account, so we don't have to worry about that particular item. So it's a customer who owes us money with interest, and they're sending the check directly to the bank rather than have us collect it in the mail and put it in our account. They show you a similar example to this in the demonstration problem at the very end of the chapter. So on page 342, there's an illustrative problem, and the first item on there is the bank had collected for the company a note left for collection. The face amount of the note was $1,000. Okay, the amount deposited was $1,030. So if the face amount is $1,000 and they put in $1,030, that extra $30 is interest. Okay, so this is a note collected, and the $4,000 represents the principal amount. The $160 represents interest. Okay, so we're going to go and see where we should put that in. So it's going to go in the addition section because that's somebody sending us money. Okay, it went directly to the bank, so we haven't accounted for it until the bank tells us that they got it. So let's see, deposits, proceeds of a note collected by the bank, including interest. Okay, looks good. And so the total principal and interest was $41.60. Alright, let's take a look at some of the other stuff that might be in addition. Alright, I'm not really seeing anything here. So that's the only thing. Alright, let's take a look at page 358. So on page 358, on part 4, they tell us, they say, assume that a canceled check for $180 has been incorrectly recorded by the bank as $1,800. All right. Hold on a second. Hold on a second here. Let me just get my head together. Hold on a second. Okay, so probably not going to need the bank anymore for the addition section. We will need the bank statement for the deductions. So let me show you a couple of items that are showing up on here. One says error in recording check number 627. The other one says error in recording July 23rd deposit. Let's go take a look at that. What we're going to do is see, okay, what's the amount per the check register and what's the amount per the bank statement. So we're going to go look at check number 627. So if we look at 627 in the bank statement, it's actually showing up as 318.73. Okay, 318.73. Now let's go look at what happened in the register. Okay, ooh, it's different. 627 in the register says 381.73. Okay, so there's a transposition error somewhere. Okay, so we have to figure out, did the bank do it? Or did we do it? So who is in the wrong here? Who is in the wrong? What do we do? What do we do? Alright, so in the instructions in part 1 on page 358, they say, if errors in recording deposits or checks are discovered, assume that the errors were made by the company. So that's us. So that means we did the wrong thing. So this is the wrong number. So the number that's on the bank statement is right. The number in our check register is incorrect. So we're going to figure out what's the difference. Okay, we actually recorded too much as being paid out, so that difference should be added back. Okay, so again, we're recording a disbursement, so we incorrectly recorded too much as going out, so the difference needs to be added back. Okay, so what I'm going to do is go back to the reconciliation here. Error in recording check number 627. We're going to take the incorrect amount in the register and subtract the correct amount, and that gives us the addition to the company records. Okay, other thing, there is an error in the July 23rd deposit. So let's go ahead and figure that out. So if we find an error, that means we did it, not the bank. So if we go and look at the bank statement, the bank statement says that the deposit on, what was it again? Crap. July 23rd. So they say the deposit was 11,000. Oh, it was for 731.45. Okay, you're probably looking at me like I'm on drugs right now, but I'm assuming, since that's the closest to July 23rd, I'm assuming that there was a 1-day lag between the day we made the deposit, dropped it off at the bank, and the day it got posted. So if we go and look at our deposit section, you'll see, okay, on July 23rd, there's another transposition error. We only recorded 7/13/45, so we switched the 3 and the 1 again, those middle two numbers. Okay, so in the bank, 7/31 is being recorded as going in. In our deposit register here, only 7/13. Okay, so the correct addition is higher. Okay, so we've recorded too little as going in, so the difference is still going to be added. Okay, so the other one was we had too much recorded as going out, so we had to add the incorrect higher amount back. Well, this one, since we have too little being added or deposited, we need to add back that difference. Okay, so the correct amount that should have been added was 7/31/45, so we're going to subtract out the incorrect amount of 7/13/45, and so it nets out to $18. Okay, so then we're going to add those additions together, and then that'll give us our subtotal for the book section. And then for the deductions, the big one we looked at in the previous couple of examples in the videos was the bank service charge, so we can go ahead and enter that in. Oh no, it doesn't want it to go there, it wants it to go here. It's picky, so let's just put it there. Okay, so we go look for any service charges on the bank statement, and if we go to the bank statement, we will see, okay, service charges are designated as SC. They have a service charge of $36. Okay, those cheating thieves. So that'll be a deduction, so we'll subtract $36 here. What? Oh, so yeah, they want me to put absolute values. Okay, so we'll just do that. It's being picky. It's being picky. Okay, the other item we need to deduct is the insufficient funds check. So if you look in the key here, non-sufficient funds. So somebody, I don't want to say it, it's kind of a bad word, but somebody messed us over and wrote us a hot check. Okay, so we're going to have to subtract that receipt we recorded from the books, because the bank has notified us that it came back as hot. Alright, so here, check return due to insufficient funds. We enter the amount, $375. Okay, so add those together. Okay, so we will subtract that from our subtotal, the deductions, and we get the adjusted balance. So we're matching. So we got $11,494 on the bottom in the book section. We got $11,494 on the top in the company or the bank section. Okay, now let's go and do our journal entries. So remember, we only have to adjust the stuff that shows up in the books, and so you'll see that they have two separate items. One for the increases where you debit cash, and one for the decreases where you credit cash. So we're going to enter our additions from the book section. So that 4241. Okay, that's going to be a debit to cash, and then we'll add all of the credits. So one is the note receivable, and we're going to put the principal amount in because that's the amount we would have credited to notes receivable. So that credit decreases the amount that the customer or whoever owes us money. Okay, but we have to account for the interest component also, so that's going to be to interest revenue. The interest portion that they paid us, that's a revenue account, and so that should be $160. Okay, and then we have the check error. So if we wrote a check, it says in the instructions to assume it was to satisfy an accounts payable. So if the error was too much credit to accounts payable, too much debit to accounts payable, we have to credit that incorrect amount back. So we debited accounts payable for too much, so we're going to credit back the incorrect portion. And then the error in the deposit, Okay, so that would have been to satisfy a receivable. So, oh wait, hold on a second. That would have been for sales, I'm sorry. If we receive cash, it's going to be a cash sale. So we recorded too little sales. So we're going to credit more sales that should have been there. Okay, I'm sorry, I didn't read the instructions, but the instruction says that assume that all deposits are from cash sales. Okay, so that's why that is. Okay, if it weren't a cash sale, it would go to receivables. All right, and then we have decreases to cash. So that's going to be the total of the decreases for 11. And we had the insufficient funds check was the first thing. So we're going to put a receivable on the books because that customer, since they wrote us a bad check, they now owe us money. So put that on as an account receivable. And then we're going to put the bank service charge to an expense account. And if we don't track bank service charges separately, we put them in miscellaneous expense. So those are our adjustments to cash for the bank rec. And then the cash reported on the balance sheet should be the same as what we report on the reconciliation. And the essay says assume a cancel check for 180 has been incorrectly recorded by the bank. So how would it be included in the bank reconciliation? So if the bank makes the error, we put it in the bank section. And so we wrote a check for $180, and that was the correct amount. And then the bank made the error. They actually took $1,800 out of our account. So the difference between that $180 and that $1,800, that should be added back to our account because the bank recorded too much as going out, so they need to add that back on their side. So we're going to call them and say, hey, where's my money? And then they're going to credit our account for the amount. So one thing that they talk about in Chapter 7 that I'll go ahead and touch on briefly is a lot of times an accounting student gets confused because they're used to hearing what the bank says. Oh, we'll credit your account for this amount, or we're going to use a debit card, and the debit card will take money out of our account. Okay, so remember those words that you're hearing are from the bank's point of view. So your account to the bank is a liability. So your savings account or your checking account that you have in the bank, that's money that they owe you. They have to give you that money when you want it. Alright, so to them, all the deposit accounts from customers are liabilities to the customer. So from the bank's point of view, if they credit your account, they're increasing a liability to you. The bank is increasing their liability to you as the customer. And then if you use your debit card and swipe a debit card, that debits money out of the liability that the bank owes to you. So they now owe you less money because you've debited. They've debited your account for the amount you swiped with a debit card. Okay, so remember the bank. They credit your account to them, that's increasing a liability to you. If the bank debits your account, they're decreasing a liability to you. So that's why the bank seems like it's backwards all the time. Okay. Alright, I hope this was helpful. Have a good day.